I greet you all and welcome you to the Manifested e-learning platform. The subject is governance and compliance audit. Today we are going to study three things. Number one, negotiating fees amount. Number two, structure. And number three, timelines in relation to governance and compliance audits. And candidates, negotiating fees, structuring payment, and establishing realistic timelines are crucial aspects of any audit engagement, particularly for governance and compliance audits where the scope can be complex. And this process requires open communication, requires transparency, and also clear understanding of value from both the clients and from the auditor's perspectives. So in this lesson, we will cover those three areas, beginning with negotiating fees amount. Negotiating fees amount. Negotiating fees amount. Now, before we get into the strategies for negotiating fees amount, I want us to discuss some of the factors that influence the fees that is charged for governance and compliance audit. And one such factor is the scope of the audit, scope and complexity of the engagement. The scope and complexity of the audit engagement determines, or is a factor that determines, the amount of fees that will be charged. For example, the question to answer here is how many governance pillars or compliance areas need to be covered. So that is a question of scope. If you are approached by a client and the client requires you to audit board effectiveness, risk management, ethics, data protection, anti-bribery, environmental aspects, you see, that is a broad area. So the breadth of the scope determines the amount of fees to be charged, so that if the areas to be covered are wide, then the fees will be more as compared to when the scope is not wide. So you look at the breadth, the depth. Apart from the breadth, there is the depth. This refers to the level of detail required for the audit. It could be high level review versus in-depth testing of controls. Then, still under complexity and scope of the audit, we have what we call nature of operations. So these 2 points relate to scope. But nature of operations here relates to complexity. This is the complexity of the client's business, industry, and geographical spread. So if the operations are too complex, then the auditor may charge more fees. But if it's less complex, then the fees may not be much. Then we have the regulations, the regulatory environment. Regulatory environment. We have highly regulated industries like financial services and telecom and others that require more extensive compliance audits, which then impacts fees. If you are auditing a firm that operates in a highly regulated environment, then you may likely need to charge more fees. Understand, candidates? Yes. Then there is also volume of transactions. Volume transactions also determines the amount of fees to charge. Volume of transactions. For complex or for compliance, the volume of data or transactions to be reviewed and so on can significantly impact the effort required, that is required. If the transactions are voluminous, then that will require a lot of effort, that will require a lot of labor, and that may impact the audit fees that is to be charged. So when negotiating fees amount as an auditor, you need to consider these factors. The first factor is scope and complexity. You look at the breadth of the scope, the depth of the scope, the nature of operations, regulatory environment, and volume of transactions. Now, the second factor is auditor's expertise and reputation. Expertise is a factor that determines the amount of audit fees to charge. The expertise of the auditor and also the reputation. Reputation of the auditor, the expertise of the auditor. Because we may have an ICS accredited governance auditor or a specialized data protection auditor that is accredited by the Office of Data Protection Commission. These auditors command higher fees due to their specialized qualifications. If you are an auditor who is accredited by the Institute of Certified Secretaries, then you are more likely to charge more fees compared to one who is not accredited. So auditors' expertise and reputation impacts the amount of fees to charge for governance and audit and compliance audit services. We have also highly experienced auditors or firms with a strong track record in governance and compliance that may charge more fees. Like in Kenya, we have what we call the big four firms. Those firms that are renowned, those firms that have vast, long experience in auditing. So such firms typically have higher fee structures due to their brand, due to their resources, and also due to the global methodologies that they employ when auditing. So auditors' experience and reputation can impact the fees to be charged. There is also specialization. Auditors with a niche expertise like cybersecurity compliance or environmental, social, and governance reporting, they may charge a premium rate. So when looking at the auditor's experience, there is one, first of all, we have auditors that are accredited. Then there is experience. These are all factors. Then still under auditors' expertise and reputation, there is specialization. You could be having auditors that highly specialize in, say, cybersecurity. Such auditors will charge a fees and even include a premium because of their specialization. So candidates, we are discussing factors that will impact audit fees. Factors, we are discussing factors. Let's move to the third factor, which is auditors' resources. Time and resources required. Time and resources required. Like personnel, we have personnel. This is a resource. Personnel refers to the audit staff. So number of audit team members and their seniority, like we may have the audit partner, the director, the audit manager, the audit senior, and assistant. So the accountants are also part of the resources or the personnel. So when negotiating for fees, you also look at the personnel. If it's an audit that requires highly specialized accountants, then the auditor is likely to charge higher fees. You understand? And in Kenya, you have the Accountants Remuneration Order, which provides minimum hourly rates for different levels of audit personnel, which influences the fees calculation. So we have personnel, then we have estimated hours. Estimated hours. This is the total estimated hours the audit team expects to spend on the engagement. That will determine the amount of fees to charge. There is also travel and accommodation. Travel and accommodation. Now, if the audit requires travel to multiple locations or branches, that again will impact the audit fees. So that's all for time and resources required. When negotiating for fees as an auditor, you consider the time and resources required. That is the third factor. The fourth factor is client's internal control environment. The client's internal control environment and documentation. How does this determine the audit fees? Now, a client with a well-documented and mature governance framework and internal control system may require less audit effort, potentially leading to lower fees. So that speaks to maturity. There are clients who may have very strong internal control system and well-documented records, which becomes easy for the auditor to carry out his function. So if a client is having a strong governance and also internal controls in place, then the audit fees may be lower compared to one that has very weak internal control system. There is the aspect of readiness. If the client's records are well organized and readily available, it reduces the auditor's time and thereby reducing the audit fees to be charged. So that's number 4. Number 5 is risk profile. Risk profile also impacts the audit fees. Higher inherent risks like complex operations, like history of regulatory breaches and weak controls may necessitate more extensive audit procedures, leading to higher audit fees. So if you are contracted to audit a company and the company has a history of regulatory breaches, if the company has not been complying with laws and regulations, or if the company has what we call complex operations, those are inherent risks, and that impacts the audit fees to charge. It may necessitate more extensive audit procedures, which leads to higher fees. Another factor that should not be ignored is market competition. The competitive landscape among audit firms, particularly in Kenya, can influence pricing. However, for specialized areas like governance audit, the number of accredited professionals might be limited, which then affects negotiation leverage. So these are factors, candidates, influencing audit fee amount. These are factors. We've discussed factors influencing audit amount, audit fee amount. Now let's discuss the negotiation strategies, because the topic here is negotiation fees. Let's move to the strategies for both client and auditor. Negotiation strategies. We can begin with the strategies for the client. Negotiation, because candidates, we know an audit engagement is a contract between the auditor and the client, and the two must agree on the fees to be charged. The client may have strategies for negotiation. The auditor also may have strategies for negotiation. We want to look at both. Now, the first strategy for the client is clear RFP. RFP. The client should have a clear request for proposal. The client should provide a detailed and unambiguous request for proposal to get accurate proposals. That's the first thing to do. Then there ought to be what we call budget indication. Budget indication is another strategy. Some requests for proposals include a budget range to guide the bidders. So there has to be a budget indication within the request for proposal. 3, analysis is yet another strategy. That means reviewing multiple proposals from the auditors, focusing on value or not just the lowest price. After the request for proposal is sent, the auditors may apply for the job, so the client should carry out comparative analysis and then focus on value in determining the appropriate auditor. That is the third strategy, comparative analysis. 4, questioning assumptions. Questioning assumptions. That means understanding how the auditor arrived at their fee, and also challenging assumptions on time or complexity if they seem inflated. Number 5, approach. Phased approach. Phased approach. Now, for large engagements, you can propose a phased approach with clear deliverables and review points. Then lastly, have relationship. Long-term relationship. Emphasize the potential for a long-term relationship if quality is high. You promise the auditor that this is not the only engagement, but the intention is to have a long-term relationship with the auditor on condition that the quality of the audit will be high. So these are 6 strategies for the client when negotiating audit fees. Now let's discuss the strategies for the auditor. Audit. The auditor's strategies. Auditor. The auditor's strategies. Now, first strategy is value proposition. Proposition. What does that mean? The auditor should clearly articulate the unique value and expertise offered beyond just checking boxes. Another strategy is transparency. That means providing a detailed breakdown of how the fee is calculated. Then being ready to justify the proposed fee based on scope, complexity, and resources. Flexibility is a third strategy. Offering different fee structures is also a strategy For example, having a fixed versus hourly or a hybrid to suit the client's preferences. Another strategy is risk premium. That means incorporating a reasonable risk premium for complex or high risk engagements. So those are the strategies candidates for the client and the auditor. Okay, so that's it for the first part of this lesson, negotiating fees amount. Then the next part of this lesson is fee structure. Let's move to fee structure. Fee structure. Fees, the structure of fees. What can we say about fee structure? Now, common fee structures for governance and compliance audit include what we call the fixed fee or lump sum. One is a lump sum. What does that mean? Now, a fixed fee is a single agreed upon amount for the entire engagement. And this structure has advantages and disadvantages. One advantage is the predictability for the client's budget, which encourages auditor efficiency. But the disadvantage could be the risk for auditor if the scope increases, or in case of unforeseen complexity that may arise in the course of the audit. If you already have a fixed amount and there are complexity that you didn't foresee, then that becomes disadvantageous to the auditor. That's a main disadvantage. And this fixed fee structure candidates is best suited for well-defined, predictable scopes with the minimal anticipated changes. So that's the first fee structure. The second fee structure is time-based. That means fee structure that is based on time. It could be hourly, it could be daily. It is fees that is charged based on the actual hours or days spent on each level of audit staff, multiplied by the agreed upon hourly or daily rates. So the clients agree on hourly rate, then the number of hours that will be spent on the engagement, you multiply by the hourly rate to get the audit fee. And one advantage of this structure to the auditor is if the scope is uncertain or changes, then that becomes advantageous. But the most disadvantage of this strategy is that of less budget predictability for the client. In case there is potential for inflated hours, if not properly managed, that may be disadvantageous to the client. Time-based, and it's best suited for engagements with evolving or less defined scopes or special investigations. All right, but it's important to note, candidates, that the accountant's remuneration order sets minimum hourly rates for CPAs in practice, which often form the basis for the calculation of the hourly rates. All right, so there is another fee structure, the third one, which is a retainer stroke progressive payment. Retainer stroke progressive payment. Now here, candidates, a portion of the fees is paid upfront as a retainer, with subsequent payments linked to specific milestones or progress during the audit. The progress could be, say, 30% upon signing of the engagement, then say 40% upon fieldwork completion, then the remaining 30% upon the final report submission. So that is retainer progressive payment structure. You understand? So candidates, we are discussing the fee structure. We are discussing the fee structure. We are discussing the fee structure. Okay, having gone through the factors influencing audit fees, we are discussing the fee structure, and we've seen that there is one structure called fixed fee or lump sum. Then there is a time-based structure. Number 3, we have the retainer or progressive payment structure. So I hope you understand, candidates, the retainer progressive payment structure. This structure, candidates, has also one main advantage and a disadvantage. One advantage of the retainer payment structure is that managing cash flow for both parties may be easier. Managing cash flow for both parties, which aligns payments with deliverables. But one disadvantage is that it requires clear milestone definitions, and it is best suited for longer or multi-phase engagements. So that is retainer or progressive payment structure. Then we have value-based pricing. Number 4, based pricing structure. Value-based pricing structure. Now, a value-based pricing structure is where fees are determined by the perceived value the audit will bring to the client rather than just time or cost. And this method, candidates, is less common for mandatory compliance audits, but can apply to strategic governance reviews. One advantage is that it can lead to higher fees for high impact audits. But another disadvantage is that it's difficult to quantify. Quantifying value is difficult. That's a disadvantage. So then lastly, we have the hybrid approach. Hybrid. Number 5, hybrid fee structure, where we have a combination, e.g. of a fixed fee for the core scope with the hourly rate for any additional work outside the agreed scope. And this method is best suited for complex governance and compliance audits, where some aspects are predictable and others are less predictable. So these are 5 fee structures, fee audit structures. 1, fixed fee or lump sum. Number 2, time-based structure. Number 3, retainer progressive payment structure. Number 4, value-based pricing. Then lastly, hybrid pricing structure. All right? Yes. Then that's it, candidates, for the fee structure. Then let's move to the other part of the lesson, which is timelines. Timelines. Timelines is the last part of this, the timelines. Negotiated fees amount, structure, and timelines. Now, establishing realistic and agreed upon timelines is crucial for effective project management and meeting regulatory deadlines. And there are many factors influencing timelines, like the scope and complexity, factors: scope and complexity. Factors influencing timelines. We've said, candidates, that establishing realistic and agreed upon timelines of an audit engagement is very crucial for effective project management. It's very crucial for managing an audit engagement. It's very crucial for even meeting regulatory deadlines, because some of these audits are required to be performed within a given time frame. And there are many factors that can determine if that is to be possible or not. One is scope and complexity. More extensive audits naturally take longer time. Then there is client readiness. Client readiness can also influence or determine whether an audit will be completed on time. We may have delays. The client may delay in providing requested documents and even delays in accessing personnel, which are major causes of timeline overruns. So you have client readiness and responsiveness. Whether an audit will be completed on time depends on the client's readiness and responsiveness. We have clients who may delay in providing requested documents. There are those who may delay in providing access to personnel, or which are major timeline overruns. You understand? So that is information availability. That is information availability. Then we have internal control system. Internal control system or internal controls. Weak internal controls or disorganized records increase audit time. Whether an audit will be completed within the given time frame depends on whether the company has a weak internal control system or strong internal control system. Then 3, we have management availability. That means timely access to key personnel and also board members for interviews. There are times when getting these managers for interviews when carrying out governance and compliance audit is a challenge, and that can determine whether the audit will be completed within the time frame or not. Are you following, candidates? Yeah, these are some of the factors. That's the second factor: client readiness and responsiveness. Then the third factor is in relation to the auditor. Auditor resources and capacity, size and availability of the audit team. We have regulatory deadlines, number 4. Regulatory deadlines. Now, for listed companies or public entities, there are specific deadlines that exist for audit report submission. For example, the Capital Markets Authority Code for listed companies. We have the Public Audit Act for public sector entities, which mandates within 6 months of financial year end to have these audits done. So regulatory deadlines also determine if the audits will be completed within the time frame or not. Locations, stroke units. Number of locations, stroke units. Auditing multiple branches or subsidiary may extend timelines. So if the company has many subsidiaries or branches, that can also impact the timelines. You understand? So these are factors that can impact the timelines of governance and compliance audits. You understand? And candidates, to manage these timelines, an auditor may be required to have a detailed project plan. The auditor should provide a detailed project plan with the key milestones. For example, when the field work starts, when it ends, when to draft report submission, when to do client reviews, and also the final report submission. Do you understand? Yes. So that's one way to manage timelines. It's not part of our discussion, but I think we can have it. Management timelines. How can the auditor manage these timelines? What should the auditor do to ensure that the audit is completed within the timeline? I'm saying one way is to have a detailed project plan. Detailed project plan. Have a detailed project plan. Have a detailed audit plan. The auditor should provide a detailed project plan with key milestones. Then number 2, we have realistic expectations. Set realistic expectations. Set realistic expectations. Realistic expectations. Setting realistic expectations. Both parties must agree on realistic timelines, considering all factors, and overly aggressive timelines, because overly aggressive timelines can compromise audit quality. There should also be regular communication. Number 3, regular communication. Communicate regularly. Establish clear communication channels and frequent progress meetings to identify and address any potential delays. This communication, candidates, is between the audit firm and the client. We've seen that one of the factors that can affect or influence the timelines is the readiness, client's readiness. So there ought to be communication, and one of the reason is management availability. There ought to be clear communication when the auditor intends to meet the managers, when the auditor intends to meet the board of directors and the other personnel. There ought to be clear communication. There should not be circumstances when the auditor ambushes the management on having interviews and so on. But if the management is given proper notice before the meetings, then that can lead to proper management of the timelines. Then there is client responsibilities. Client, number 4, responsibilities. Client responsibilities. Now, the engagement letter and the terms of reference should explicitly outline the client's responsibilities to provide information and access in a timely manner. When that happens, then that can lead to completion of the audit work within the time frame. Change management. Change management. This means having a process of managing scope changes or unseen issues that may impact the time and fees. And that can be done through a formal change order. Because as much as the audit engagement may have a plan, there are times when there could be unforeseen circumstances that can lead to changes in the scope of audit. That's why it's important to have in place a process of managing scope changes or unforeseen issues that may impact the timeline and fees. Okay? Then there is management response time. How can this be of use. Now, there ought to be clearly defined expected turnaround time for management to provide responses to audit findings. It should be clear and should be agreed on the time that the management will take in order to respond to queries from the auditor. So that is how to manage timelines. And that's the end of our today's lesson, candidates, on negotiating fees, structure, and timelines. We, in this lesson, studied 3 things. We've studied the strategies for negotiating for audit fees. Before then, we discussed the factors influencing the audit fees. One such factor is scope and complexity of the engagement. Number 2 is auditors' expertise and reputation. Number 3 is time and resources required. Time and resources required. Time and resources required. That is point number 3. Time and resources required. Then 4, we have clients' internal control environment. Number 5 is risk profile. Number 6 is market competition. These 6 factors influence the audit fees to charge the client. Then we went into the strategies for negotiating for fees. We have client strategies. One is having clear RFP, request for proposals. Number 2, having budget indication within this RFP. Then number 3 is a comparative analysis, carrying out comparative analysis. Number 4, questioning assumptions. Number 5, having a first approach. Then lastly, maintaining a long-term relationship. These are 6 strategies for the client. Then there are 4 strategies here for the auditor. 1 is value proposition. Number 2, transparency. Number 3, flexibility. Number 4, risk premium. Then we've studied the different types of fee structures. 1 is the fixed fee structure. Number 2 is time-based fee structure. Number 3 is the retainer progressive payment structure. Number 4 is a value-based pricing structure. And lastly, hybrid structure. Then in closing this lesson, we've discussed the factors determining the timeline. Factors that determine the timeline. Okay. One such factor is scope and complexity. Number 2 is client readiness and responsiveness. Number 3, audit resource and capacity. Number 4, regulatory deadlines. Number 5, number of locations. Then we've discussed the negotiation and management of timelines, how to manage the timelines. One way is having a detailed project plan. Number 2, the auditor and the client should have realistic expectations. Number 3, there is regular communication. Number 4, client responsibilities. Then there is change management. And lastly, management response time. So candidates, that's all. And it's important to note as we close that by engaging in robust negotiations on fees and structuring payments strategically and agreeing on practical timelines, both the client and the governance auditor can establish a clear, they can also establish mutually beneficial engagement that contributes to effective oversight and organizational integrity. That is the end of our today's lesson. In our next session, we will continue to share knowledge in governance and compliance audit. Bye-bye.